At the start of the week, trading activity looks somewhat muted, even though trading volume was average. Market participants were acting cautiously. Worries regarding the chip market were offset by the steady rally in oil prices. As a result, the session on a Monday closed at the opening levels, just as we had predicted. On a Tuesday, the macroeconomic data and the fresh news breathed some life into the stock market, but strong movements are still unlikely today. InstaForex analysts are ready to present you with the latest market news and to forecast. Welcome to our fresh review of the US financial market. As mentioned earlier, but the closing bell yesterday, major US stock indexes stayed almost at the same levels. The Dow Jones Industrial Average edged up by a modest 0.02%. The tech-heavy Nasdaq saw a small rise of 0.01%, and the benchmark S&P 500 index climbed by 3 points, or 0.07%, to settle at 4,453 points. On a Tuesday, the stock market was trading mixed, and the release of a fresh real estate data from the US pushed the major stock indexes into the red. Futures indexes were moving down by 0.2 to 0.3%, and the trading range for the S&P 500 index is seen between 4,410 and 4,470 points. Yesterday, Wall Street adopted a wait-and-see stance while estimating forecasts about the Federal Reserve's rate decision on Wednesday. All three major US stock indexes ended the volatile session with moderate gains, as investors saw no suitable drivers and were not in a rush to trade. The highlight of the week is the Federal Reserve policy meeting on Wednesday. The regulator is widely expected to halt its rate hiking cycle this time. If so, the Fed funds rate will remain unchanged for the second time since March 2022. The Federal Open Market Committee is also slated to release its quarterly summary of economic projections, which will incorporate the dot plot, a visual representation of how Fed members see the future trajectory of the interest rates. Currently, 99% of traders are confident that the Federal Reserve will maintain the key rate between 5.5% on Wednesday. Furthermore, the likelihood of the FOMC taking a pause in November stands at 69%, as indicated by the FedWatch tool. The US Central Bank promised to be flexible and take into account the incoming economic data. The recent inflation report indicated that core consumer prices continue to slow down towards the Fed's key target of 2%, and this suggests that the US economy remains on a solid ground. Yet there are some headwinds in the form of a rally in oil prices that are currently heading for $100 per barrel. Apart from the soaring fuel prices, staring inflation concerns, fears of a government shutdown have also re-emerged this week. Treasury Secretary Janet Yellen stated on a Monday that while she doesn't see an imminent risk of a collapse, a government shutdown would create a situation that could cause a loss of momentum, something we don't need to see right now. In the corporate sector, the energy company stocks continued their bullish run, with the energy sector on the S&P 500 leading the growth on a Monday. Shares of a chip manufacturer ARM Holdings dropped by 4.5% after Bernstein downplayed the company's prospects. Also, a rating change from an outperform to market perform status led to a 2% dip in People's Securities. On Tuesday, US stock index futures traded confidently during the European session, but slipped into negative territory as the US market opening approached. This shift was attributed to the release of a mixed real estate data, which tends to be highly sensitive to the Federal Reserve's rate hikes. In August, the number of building permits in the United States jumped by 6.9% to 1.543 million, and this was the highest reading in 10 months, which exceeded market estimates of 1.443 million permits. In the meantime, U.S. housing starts plummeted by 11.3% in August. This was the lowest level since June 2020 and below the forecasts. At the same time, the sharp slowdown did not surprise markets, given tighter financial conditions, rising mortgage rates, and higher house prices in the United States. Notably, these alarming data are unlikely to affect the market today. Wall Street's optimism is diminishing pessimistic outlooks and sentiment. In particular, U.S. Treasury Secretary Janet Yellen said that a soft landing scenario for the U.S. economy could counter short-term risks, and this includes an auto union strike and the threat of a government shutdown, the resumption of student loan payments, and the spillover effects of China's economic woes. On the other hand, the Economic Development Organization revised upward growth forecast for the U.S. economy both this year and next, as well as its global forecast for 2023. In the corporate sector, investors are looking to grocery delivery app Instacart's IPO on the Nasdaq to gauge a potential rebound in the IPO market. Maple Beer, Instacart's parent company, was valued at $9.9 billion after its IPO priced at $30 per share. Intel shares soared by 1.3% ahead of a two-day event for chip designers starting today. Shares of Amazon, Microsoft, and Meta remained under pressure, losing 0.3% and 1.3%. The forex market continues to await the Fed and other central banks' interest rate decisions. The US dollar index fell below 105 during the day. Lately, it managed to recover, remaining under pressure. It's expected to move within the range of 104.70 and 105.30. In anticipation of the Fed's decision, the FOMC statement, and the Powell speech, investors were focused on inflation data from the Eurozone. According to Eurostat, inflation in the euro area was 0.5% on a monthly basis and 5.2% on a yearly basis in August, below the preliminary estimate of 5.3%. The data showed that consumer inflation eased slightly, but was still more than double the European Central Bank's target. Given that markets are almost certain that the ECB has completed its tightening cycle, the release of the CPI gave the euro a short-term boost against the US dollar. Unlike the single currency, the US dollar enjoys a better outlook. Not only is the currency favored by the state of the US economy, but it's also hoping for Powell's hawkish tone. Even if the Fed chief remains dovish, the fresh data supports the US currency. Compared to the rest of the currency market, the Canadian dollar is shining bright today. The asset is steadily strengthening, and the dollar and loonie pair reached its 6-week low at 1.3394, down an impressive 0.63%. The pair is projected to trade within the range of 1.3370 and 1.3430. In addition, oil prices spurred the loonies gains today. Meanwhile, the Canadian economy still faces soaring inflation. In Canada, inflation jumped to 4% in August, from 3.3% in July amid elevated gasoline prices. Notably, the figure exceeded forecast of 3.8% in August. On a monthly basis, the CPI rose by 0.4% against the forecast of 0.3%. The Bank of Canada's 2 out of 3 main indicators of core inflation also soared. The median CPI increased to 4.1% from 3.9% in July, and the headline CPI also climbed to 3.9% from 3.6%. As for oil prices, both benchmarks posted gains driven by production restrictions. Brent and WTI futures added 0.9% and 1.2% respectively, supporting to the Canadian dollar. Meanwhile, the cryptocurrency market shows high volatility. Crypto assets continue to react to rumors. As a result, Bitcoin rose to $27,100, adding about 1.2%. As for the altcoins, they were also mostly trading in the green. In addition, there are rumors that the SEC may approve several Bitcoin ETFs and that BlackRock bought more than 12,000 Bitcoins. Apparently, in anticipation of the approval, Coinbase launched a major paid media campaign on Tuesday, encouraging users to contact members of the Congress and ask them to pass cryptocurrency legislation. Moreover, Coinbase is running an event on September 27. Executives and developers from about 35 crypto companies will meet with the staff and lawmakers on a Capitol Hill. As for Bitcoin, it little changed, moving in the range of $26,800 and $27,350. If the flagship crypto breaks one of the boundaries, it may either fall to $26,550 or rise to $27,800. Make profits with the InstaForex. Your feedback is appreciated. Have a nice trading and see you online tomorrow.